Welcome to the Week in YouTube Finance. All right, let's get into it.
We have an immediate issue.
In the next 3 years.
Yes.
Chinese President Xi Jinping has issued a clear warning.
Such times are very much like the 1930s. We have a breaking down of the monetary order.
What's up, you guys? It's Graham here, and we got a problem. Not too long ago, the billionaire Ray Dalio posted a video titled Principles for Dealing with the Changing World Order. This was a 43-minute long presentation about the impending downfall of every major economy as we know it, how these evolving cycles typically happen on a regular basis, why the times ahead will be radically different from those that we've experienced in our lifetime, and how we could best prepare for what's to come based on predictable events that seem to happen once every 100 years. Although now he says we are living through exactly what he was talking about, as in we've just seen weakening of the dollar, tensions around the world, and lost confidence in the United States, all signs that the shift isn't coming, it's already happening. And the question isn't if we're in the middle of a changing world order, it's how deep in we are and what we're going to do about it before it's too late. That's why we really got to discuss exactly what he says is going to happen and what you could do to best prepare going forward, because like it or not, this is going to have a direct impact on you, especially if you're caught off guard. Although before we start, as usual, if you enjoy videos like this, it would seriously mean the world to me if you hit the like button or subscribed if you haven't done that already. I know, I hate asking, but all the metrics say it makes a significant difference in the channel, and as a thank you for doing that, I will do my best to read and reply to as many comments as I can. So thanks so much, and also a big thank you to Helium Mobile for sponsoring this video, but more on that later. Alright, so I've said this before, but to quickly bring you up to speed, all of this starts with the US dollar. For the last 80 years, our money has become the most powerful currency in the world because it's what's known as the reserve currency. This refers to money that's commonly accepted throughout the global economy, and since 1945, the US dollar has taken that top place because of its resiliency, lack of volatility, and safety. See, when you have dozens of countries all around the world trading goods and services with one another, it helps to use one universal currency accepted around the world with a predictable value to conduct those transactions in. Otherwise, you run the risk of getting paid in one currency that could be difficult to exchange, and by the time you're able to convert it back to your native currency, the value may have risen or fallen. Of course, the United States benefits from this as well, because the more countries hold the US dollar, the more demand there is for the US dollar. This is why I don't think it's a good idea to completely restructure your entire investing philosophy based on events that could take decades to play out, during which the market continues moving higher. Now, that's not to say we won't see a stock market drop in the future. I have no idea. It's just to say that the markets are completely irrational, and it's best not to time things around events that just might not happen. This is why, for me, I'm allocating about 1/3 of my money towards US stocks, 1/3 towards international stocks, and another 1/3 towards a Bitcoin ETF, along with some treasuries that I also hold on the side. That way I'm not going to miss out on the upside. If stocks go lower, I can continue buying in, and if the US dollar does lose dominance, the Bitcoin ETF should hopefully take its place. Of course, I could also be completely wrong, so don't listen to me because I'm just a dude in a half-converted garage making YouTube videos, and I just really enjoy hearing out all perspectives, hearing what other smarter people than me have to say, and no matter what, hitting the like button and subscribing if you haven't done that already.
Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation.
Daddy Powell and the Fed are not coming to save you and your portfolio. Whoa, fuck flex! Fuck flex! 95% of the audience have no idea what I'm talking about. So what's going on? The NASDAQ ripped over 2,400 points off its April 7th low, and then almost overnight gave back 900 points. Nvidia's getting crushed. China's being isolated. Daddy Powell just made it crystal clear that the Fed is not here to save you. And guess what? Gold just hit another all-time high. 3,300 an ounce. I'm going nuts with these with the soundboard because I'm getting comments saying that every time I hit it, I'm a child and that they're gonna dislike the video. So guess what? Let's break down what's really happening beneath the surface of these markets and how it affects your portfolio. Let's get into it. Okay, so let's start with NVIDIA. So on Tuesday evening, they announced that the U.S. banned them from selling their chips to China for the indefinite future. This isn't just a political move. NVIDIA expects a $5.5 billion change to their Q1 earnings because of it. That's massive. So if we look at this right here, the company's first quarter of fiscal year 2026 ends on April 27th, 2025. First quarter results are expected to include up to approximately $5.5 billion of charges associated with H20 products for inventory, purchase commitments, and related reserves. Okay, so the market responded exactly how you'd expect. So at 6 p.m., selling pressure began. The NVIDIA ban happens. Financial impact was $5.5 billion. And then also NVIDIA fell over 10% intraday. But check out this video right here from founder Jensen Huang when he visited Beijing on Thursday.
We've grown up in China, in fact. China has watched us grow in the last 30 years. It's a very important market for us.
So this is leading to China's isolation escalation. Try and say that 5 times fast. Isolation escalation, isolation escalation. Okay.
Take it easy.
So this is coming from the Wall Street Journal reporting that the U.S. officials now working with over 70 countries to block China from rerouting exports through their borders. Take a look at this. We can see House U.S. officials plan to use negotiations with more than 70 nations to ask them to disallow China to ship goods through their countries, prevent Chinese firms from locating in their territories, to avoid U.S. tariffs, and not absorb China's cheap industrial goods into their economies. We're trying to bully them a little bit. Whoa! So what is this going to lead to? This is more than just tariffs, you guys. This is a coordinated effort to isolate China economically. So that's an aggressive step in the ongoing trade war, and markets hate that kind of uncertainty. So now here's where things really turned around. At 1:15 p.m. Eastern Standard Time, Fed Chair Jerome Powell stepped up to speak. So the market was already down about 1%, but it was holding up. So he was asked directly, will the Fed intervene if the stock market plummets? His answer was no. And he made it clear, despite all the uncertainty, the market is functioning as it should.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally. And we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply.
President Trump is not happy with the Federal Reserve Bank's refusal to listen to him and refusal to cut interest rates. And now it looks like Donald Trump might be looking for a way to get Jerome Powell fired, and this has Wall Street nervous because they say it could trigger an even bigger stock market sell-off. Let me explain what's going on because it really started this Wednesday. On Wednesday, Jerome Powell, who is the chairperson at the Federal Reserve Bank, gave an interview where he said he's not interested in cutting interest rates anytime soon because he wants to wait and see what happens with tariffs, inflation, and the economy. But the part that really irritated Donald Trump here was when Jerome Powell said this, quote, "Tariffs are highly likely to generate at least a temporary rise in inflation, and the inflationary effects of tariffs could also be more persistent." Now, again, all of this is speculation. I just want you to be aware of what the Federal Reserve Bank is saying, what the government is saying, because we don't know what's going to happen. We know that Democrats, Republicans, even the Treasury Secretary of the United States have said that if Jerome Powell is forced out, it would create a shakeup in the economy and it could trigger a stock market sell-off. Now, of course, we don't know for sure, but this is what a lot of people have said.
Well, there you go. Fascinating. What do you think about it? Let me know in the comments below. Do me a favor, like and subscribe, of course, and we'll see you next week.